Hey everyone, welcome back to the channel. Today we're talking about something a lot of new traders are curious about: trading futures, and why it can be more like gambling than real investing. If you've ever seen someone on social media turning a small account into a huge profit overnight, this video is for you. I'm going to break down, in simple language, what the stock market and investing really are, what futures actually do, why they can feel like a casino, and how you can build wealth without betting your future. Let's get into it. First, let's clear something up. People often say, the stock market is just gambling, right? The truth is, it can be if you treat it like a casino, but it doesn't have to be. Gambling is when you put money on something you don't fully understand, rely mostly on luck, and have almost no control over the outcome. Investing is different. When you invest in the stock market, you're buying pieces of real companies, using research and a plan, and focusing on the long term, not the next 5 minutes. So the stock market itself is not the problem. The way many people use it is. Let's keep this super simple. Investing is putting your money into assets that can grow, letting time and compounding work for you, and accepting some risk for a chance at higher returns. In the stock market, that usually means buying shares of companies or investing in broad funds like index funds or ETFs. You're not trying to guess what will happen in the next hour. You're trying to benefit from what happens in the next years. Real investing looks boring from the outside. You buy, you hold, you add more over time, you stick to your plan. Not very flashy, but over time, it can be very powerful. Now, let's talk about futures. A futures contract is basically an agreement to buy or sell something in the future at a set price. You can trade futures on lots of things: stock market indexes, commodities like oil, gold, wheat, currencies, interest rates, and more. Here's the key. With futures, you don't usually pay the full value up front. You use leverage. That means you control a big position with a much smaller amount of money. This can make both gains and losses very large, very fast. Imagine controlling $10,000 worth of something with only $500. If the price moves a little in your favor, you can make a lot. If it moves against you, you can lose a lot, even more than you put in. And that's where the gambling feeling comes from. Futures by themselves are just tools. The problem is how many people use them. Here's why trading futures often becomes gambling. High leverage, small price moves, huge impact on your account. That's exciting, but also dangerous. Short time frames. Futures are often traded over minutes, hours, or days. You get glued to the screen, chasing every tick. Emotional decisions. When the numbers are jumping up and down, it's easy to panic, get greedy, or revenge trade. Overconfidence. Winning a few trades in a row can trick you into thinking you've figured it out. Then one bad trade wipes you out. No real plan. A lot of new futures traders don't have a written strategy, don't have rules for risk, and don't know when to stop. Put all that together and you don't have a calm investing approach. You have a casino on your phone. There's another problem people don't talk about enough: the emotional cost. Always watching the charts, not sleeping well, getting angry after losses, feeling high after wins, and then chasing that feeling again. That emotional roller coaster can affect your mental health, your relationships, your work, or studies. Ask yourself, is this really how you want to build wealth? So if trading futures is often like gambling, what's the alternative? It's not never touch the stock market. It's changing how you use it. Here's a calmer, smarter way to approach investing. Think long-term, aim for years, not minutes. Ask, will this still matter 5 to 10 years from now? Use simple products. Instead of complex futures, consider individual good companies you understand, or broad index funds that track the market. Diversify. Don't put all your money in one stock or one idea. Spread it out so one mistake doesn't destroy you. Invest regularly. Add money slowly over time, every month, every paycheck, whatever works for you. This is called dollar cost averaging. Protect your downside. Never invest money you absolutely can't afford to see go down. Have an emergency fund outside the market. When you do this, you're no longer trying to win a lottery. You're building wealth step by step. Let's compare two people. Person A trades futures. They put in a small account, take big risks with leverage, win a bit, lose a lot, and spend hours staring at charts. Person B invests in the stock market. They buy a low-cost index fund every month, leave it alone, and focus on improving their skills and income. After 10 years, Person A might have big wins or big losses, but many end up with nothing and a lot of stress. Person B has a portfolio that has grown with the market, plus peace of mind and more time for real life. Which path sounds better for your future? Quick self-check. Answer these in your head. Do you trade mainly because you're bored? Do you risk more after a loss to win it back? Do you hide trades from people close to you? Does your mood jump with every trade? If that sounds like you, your trading might be more gambling than investing. That's a sign to slow down. Here's a beginner-friendly way to get started. Learn the basics, understand, in simple terms, what a stock is, what a fund is, and how fees work. Set clear goals. Ask, why am I investing? When will I likely need this money? How much risk can I handle? Choose a simple strategy. For many people, this works well. Put most money in broad index funds, maybe a small part in solid companies you understand. Invest regularly. Add money every month or whenever you get paid. Make it a habit, not a one-time event. Review, don't obsess. Check your investments on a schedule instead of every hour. When you step back from constant trading and follow a calm plan like this, you take back control of your money and your time. If this video opened your eyes a bit, hit the like button so more people can see it. Subscribe to the channel if you want more simple, no-nonsense videos about the stock market and investing. And tell me in the comments, have you ever tried futures trading? Do you think it feels like investing or like gambling? I read your comments and I'd love to hear your story. Futures trading can look exciting. The dream of turning a little into a lot, fast, pulls many people in. But speed, leverage, and strong emotions are a risky mix. If you want the stock market to help you build a better life, focus on patience, learning, and discipline. In the end, the biggest difference between gambling and investing is not the app or the chart. It's your mindset. Choose to think like an investor, not a gambler, and your future self will thank you. The stock market doesn't have to be a casino. Use it as a tool, not a slot machine. Thanks for watching. Take care of yourself, and I'll see you in the next video.